Hi, I'm Victoria Woolley Parry with Parry Properties at Sotheby's International Realty, and I'm in my downtown office with Dan Shlufman, Manhattan real estate attorney and mortgage broker, for one of a series of videos about legal and financing aspects of buying and selling residential Manhattan properties. And today we are talking about first-time home buyer financing. So Dan, when it comes to financing, walk us through what a first-time home buyer needs to provide about themselves and what you need to know about the building they're purchasing into. Let's start off with the buyer, the preparation, the paperwork, timing, etc.
Okay, so for a buyer, a first-time buyer or any buyer really, what they want to do is they want to make sure they have three things: income, asset, and credit. So on income, they want to provide their most recent pay stub, W-2 statements, and their tax returns if they're self-employed.
Okay.
As for asset statements, they want to show enough money to buy, plus reserves, which we can talk about later in another video as well, what a building may require. That'll be bank statements, investment account statements, IRA, and other retirement statements. And then credit, they want to make sure that they've got a good credit report, that their credit scores are high enough, and that they make all the payments.
Okay, great. And now talk to us about the building.
Right, so the building has to also be approved. So the interesting thing about a co-op and condo is when you're doing a loan for a co-op and condo, it's two levels of underwriting. The people get underwritten and the building gets underwritten. Right. For the building, there's four things that lenders want to see. They want to see a questionnaire, which lists all sorts of information about the building: owner occupancy, number of units in default, any litigation, things of that sort. They also want to see the financial statements for the building for the past 2 years. They want to see the current budget, because the financial statements usually are older, so they want to see the current budget. And they want to see the insurance for the building to make sure that the building has adequate insurance.
Okay, great. And now tell us about what you have to do as a mortgage broker regarding lending in a particular building and the difference faced when it's a co-op versus a condo.
Okay, so as a lender, the co-op and condo aspects are somewhat similar, because the documents are very similar for a co-op and a condo. The big differences are with a co-op, the buyer has to get approved by the co-op, while with a condo, it's a right of first refusal. So for the buyer, there is definitely differences. From a lending perspective, the differences are more subtle and probably a little beyond what we can cover today. But there are some differences. But I think the most important thing to take away is that the building must be approved on their financials and on their building as well as the person.
Great. Well, thank you, Dan.
Thank you.
All of Dan's contact information is going to appear in the description below. Stay tuned for our next videos. Thank you for joining us. I'm Victoria Woolley Parry with Parry Properties at Sotheby's International Realty. Please subscribe to our YouTube channel at Parry Properties at Sotheby's International Realty and hit the bell notification so that you'll receive alerts about our upcoming videos that are on New York City real estate, local business, and community events in Manhattan. Thank you.